We have two mining permits. And obviously, this is extremely valuable to have anywhere in
Yes.
the world. And the reason for that is because of the past production. There's past production from the high-grade underground veins. There's also an historical production from the Taurus East mine, which is kind of an extension, we believe, of the Taurus deposit itself. 35,000 ounces were produced there. So we have in the south on the underground veins, a 20 square kilometer mine permit that covers the mill, two tailings facilities, and all the four vein systems and most of the infrastructure that supported it. And in the northern part of our park, which is mostly bulk tonnage, and in the area where we have the Taurus deposit, we have a 1.2 square kilometer mine permits that covers most of the Taurus deposit. Kind of, it's already bleeding out to the west, but also it has more than enough ground to continue to expand mineralization to the east, and that puts us in a very unique position.
Marco Roque, Cassiar Gold. Good morning to you. How are you?
I'm good, Andy. How about you?
Doing well. So you're not in North America right now. You're over in Europe. Is that correct?
That's correct.
Awesome. Well, it's a really balmy 32 degrees right in Atlanta right now. So I'm sure you're missing out.
Yeah, I am, by the sounds of it.
Yeah. Well, let's talk about you and your background here. That's what I want to talk about first. You had a hard money background. Tell me about that. What got you interested in mining?
Well, the path, I guess, goes back a long time ago. I started my career in banking. Throughout my studies, I was always very interested in business and finance. In my teens, I would, religiously read Financial Times, Bloomberg every day. I got into banking. I studied business and finance. I got into banking. And I was in the banking world in the crazy days, pre 2008, and I guess kind of my real interest for gold started at that point when I saw the bailouts, from several industries, including banking. I was just scratching my head onto why that made any sense. I had a lot of my good friends and even industry people, meaning banking, telling me how important it was to bail out everyone. And I was just, couldn't make sense of it because, in the good times, when the profits were flowing and the money was flowing, everyone was happy to, take and keep what it's theirs and their profits. But then, when things went bad, obviously, call the taxpayer for the bailout. So I got into a deep dive into kind of finance and banking and monetary system and monetary history and banking history, etc. And I quickly realized I did not own enough precious metals, in particular gold. So I, back in 2007, 2008, started investing in gold, and later in silver. Got acquainted with Bitcoin back in 2009, and kind of fast forward a little bit. I did my MBA between Hong Kong, USD, and London Business School, and I moved to Hong Kong, and in basically together with a couple of MBA classmates, set up an advisory business focused on precious metals, and then a merchant bank, and then became a kind of a mining entrepreneur as I realized, I guess, over the process, how attractive, or theoretically, like the operational leverage that producers, or gold producers or silver producers have to the metal, and then eventually kind of going into the rabbit hole of seeing where these projects come from and the huge gains and profits that could be made by finding and developing and putting in production some of these projects. Of course, the earlier stage you go, the further down the rabbit hole you go, the bigger the potential profits, and had a lot of successes with that. Obviously, a lot of failures as well. I made a lot of money, lost a lot of money, but that's kind of my journey into kind of hard money and into the rabbit hole of mining and eventually to like exploration and development.
It's interesting. A lot of the people I talk to have a background in geology, but you don't. You have a background in finance, which actually I prefer. And the reason I prefer that because you see this as a business as opposed to the science of it. Not to diminish the science, because at the end of the day, it's all about the gold and how much you have in the grade, right? But I think that's where a lot of mining companies fall short, really, is in the capital markets. But and you're a hard asset or a gold advocate. Correct me if I'm wrong.
I'm both really. I think, I'm not a fundamentalist on golds. Like I like gold, I like silver. I think there's a lot of merits to Bitcoin, for example. I think there's a lot of caveats there as well. I think real estate makes sense, a lot of sense actually. And yeah, just hard assets as opposed to like a debt fueled economy, which is what we've been living since 2008, which is creating a bit of an illusion. And I think it's going to end up in tears for a lot of people in a lot of places around the world, given kind of the debt binge that we've been living since, I guess, in the last 16 years.
Tell me a little bit about what brought you to Canada and how you end up doing mine in Canada.
Yeah, absolutely. So I guess, in this process that I was telling you about, kind of going down the rabbit hole, I started looking into the attractiveness of the producers. Like I remember back in 2011, 12, 13, the margins were really thin. All-in sustaining costs, like overing just under $1,000 an ounce, with the price not too far away from it after kind of that 2011, 13 crash in the gold price. So I started looking. My journey was kind of very like one step at a time. I was, my first focus was really looking into, like the safest of all kind of potential projects. So always looking for the highest grade, no matter what, because then you'll have always that kind of protection. So I started investing in a few companies, both in the silver and gold space, that were, developing, quite exciting projects, which at the time I see with limited downside. So, I was looking at companies like Pretium Resources, or which is basically a gold explorer. It's now a producing mine in British Columbia in Canada. Looking at Max Silver, one of the highest. Now it's also producing as well, silver project in the world in Mexico. Another company, the Skeena Resources, also in British Columbia, also not too far away from our projects. Yeah, I guess throughout the process, made quite a bit of money investing in those and kind of understanding the projects, quite in depth as well, and kind of not only with those projects, but many others, kind of looking at things that work, that don't work. To your comment as well. Some companies that are run by geologists have kind of a different behavior than maybe some companies that are more run by business people. And this is not to discredit any geologists, because they are like the most fundamental part of this business. But they do have a different mindset, and geologists are very interested in geology, and sometimes forget a little bit about the math that is required and kind of the business sense that is required to actually run and advance a business to be a financial success, which is what everyone wants at the end of the day.
Yeah. And I want to go back to that team of the geologists that you have, but that he had a very integral part of you getting this property and this project. Correct me if I'm wrong.
Yeah, that's right. I guess kind of fast forwards to 2020. I guess kind of in the 2010s decade, spent a lot of time in the business, ended up meeting and getting a lot of projects, a lot of CEOs, a lot of companies, saw the ups and downs, difficulties in kind of raising capital, investing in the project, but also at the same time, the gains that could be made in kind of embedding in the right project, and go through the very I guess volatile, but also almost schizophrenic behavior of valuations in the space. So, when you like understand something deeply, and understand kind of, the industry is full of risks, but also has a lot of potential. So kind of understanding the risks well of the projects, and kind of getting to know some of the top geologists. I got to meet, well, one was Dr. Peter McGaw with Max Silver Project. The other one was Doug Kerwin. Dealt with him quite a bit, and we developed quite a close relationship with Doug Kerwin. He ended up being kind of the big kind of igniter, or like the big reason I jumped into this project, because I've been working with Doug and sending them dozens and even hundreds of projects, and these some of these projects, or actually all of these projects, always had a problem. Doug was quite, I would say, demanding. Always finds some sort of flaw, not big enough, or too high altitude, or not enough potential, or the grade isn't there, or it's too small. Or or too hard, or the jurisdiction doesn't work. There's a long list of risks for any mining project. And then, at the time I was kind of showing this project, which I was involved as an investor, as a shareholder, what is now Cassiar Gold. And after receiving all that negative feedback from so many projects I've checked over the years, Doug Kerwin, which had in the past been the VP for Ivanhoe, said that actually this looked really good. At the time, we had basically a 1 million ounce resource. We had mine permits, infrastructure, access, a big land package, and I was wondering, like, what's the potential here? And he said, this is back in 2020, meaning over 62,000 meters of drilling ago. And he said, well, I can easily see 3 to 5 million ounces here. And by the way, this looks like a lot like Fosterville did 100 years ago. And, I was happy with the 3 to 5 million ounce potential, because I knew that was, that would be enough to make a kind of a tier one discovery at the time, or to find a tier one project. And then when you compare this asset to the Fosterville district, which is the lowest cost producer in the world at the time, and a massive district that yielded almost 100 million ounces, I was thinking, Doug compared this district to the Fosterville district, and
Yes.
Knowing the size potential and basically the cost potential of the Fosterville district, it was just too hard to say no, and I decided to jump on board. And I've been seeing a lot of projects come and go, a lot of companies, management teams, and I realized it would be extremely hard to find anything that came close to something like this. And to be honest, and to Doug's credit, it's been really delivering on everything we've hoped for this district. And it's much easier to speak now after 62,000 meters of drilling with the kind of hit ratio we've been having. But I guess I owe, and I think the company and everyone that is involved and benefits from the development and the advancement of these assets to Doug's basically assessment and belief in this project in this district.
Okay, so there is a lot going on there. What I'd really like to do is hammer down on what you have, but also there's this business tension, and it's a good tension between you and Doug's. Him telling you no, and then him finally telling you yes. So let's first start with him telling you yes. Now, where are you at with the project? And then let's talk about what you have, that you have, and what you potentially have.
Yeah. So I guess, going back to that. So I guess, we, at the time, we had a 1 million ounce resource, mine permits, great access, great infrastructure, because it's a past producing district. We have past producing mines. So that's the reason we have all that infrastructure. We increased our resource by 40% to 1.4 million ounces. And basically in 2022, 2023, and 2024, we drill and accumulate over, in addition to the drilling from the first couple of years, we drilled an additional 46,000 meters of drilling, and with a very high hit ratio. Out of over 200 drill holes, we only missed a couple of them. So it's and really focus on expansion, keep on finding more consistent mineralization, similar grades what we were seeing before, similar styles of mineralization, similar styles of alteration, similar characteristics in mineralization. And this is a very large land package, 590 square kilometers. We only basically touched on a very, very small footprints of the project in terms of drilling, and as well as mapping or sampling or geophysics. So it's really living up to the expectation, and in fact, I'm getting much more bullish than what Doug was to the ultimate potential of this project. But it's very easy to say after 4.5 years on top of the project, and the drilling, and like good geologists need to be also like slightly conservative. You want to have a good balance. Some of them are extremely bullish and they like everything. Some of them are extremely conservative and find a negative on every single project. So, I guess it's really experience and seeing, what success looks like and being successful that really puts you in a position to, separate the really good ones from the potentially good ones.
Yeah, exactly. So if I heard, that's all I hear is great success is coming, that sort of thing. So it's good to have a good geologist to keep you grounded. Let me ask you this now, though. This is what I really want to know is, what do you have now with drilling? If you can just say that again and then work that out. I don't know if you want to go to potentially, because you might not be able to say that, but what do you have now known that's in the ground?
Well, the only thing I can talk about is our resource from early 2022. So that's 1.4 million ounces at 1.14 grams per ton inferred. That deposit is right at surface, is outcropping, which is very rare to see these days. The overburden on the deposit is over, on average 10 meters. 90% of the 1.4 million ounces we have from early 2022 are within 150 meters from surface. That deposit is open laterally, is open at depth, and we've been expanding that as well as open internal to the pit shell, which we've also been expanding mineralization there as well. So, I cannot tell you how many ounces we think we have right now. We think we have more. We've drilled over 46,000 meters. With a very high hit ratio, as I mentioned, almost 100%. And the focus has been really expanding mineralization. We're not trying to upgrade to the resource confidence. We really want, our objective really is to prove up the potential that we believe we have in this project, which is a tier 1 potential. And that means 5 million ounce plus, which basically would put us on the radar for every single gold producer on the planet. The indications are really good. If you look at the drill results, intercepting mineralization from surface in many, many cases, the more we drill, the more we find. And, I think it's a really good setup, but at the same time, just to give you a sense, the Torres deposit, where we have the 1.4 million ounces, sits on 1 square kilometer footprint. And the size of our land,
590, correct?
Correct, 590 square kilometers. So, there's a lot of potential to keep, not that necessarily everything is perspective, but the truth is at the same time, we really haven't sterilized any part of the property, which is also a good place to be. So it's, the indications are really good. It's an interesting project in the sense that a lot of people, because we have the infrastructure, the access, the mill, the mine permits, people tend to look at it as, oh, this is kind of a near-term development opportunity, which it also is potentially. But in terms of the exploration potential, the exploration work in this district, in this land package, we really only scratched the surface here. There's a lot of room to continue to explore laterally across our vast land package, as well as the depth, because the average drilling last few the 5 season of drilling. It's been on average 300 meters, 350 meters deep. And you see a lot of deposits these days that are go down to 500,000 meters, even 2,000 meters sometimes. So we're very far away from doing a proper job at assessing the ultimate potential of this, and maybe one day the Fosterville comparison would make sense, but it's that's the blue sky potential that will take a long time to prove.
Well, let's talk a little bit about your jurisdiction, where you're at. You're out of BC. Where exactly in BC?
Yeah, so we're in northern British Columbia. So we're north of the Golden Triangle. Most people know the Golden Triangle quite well because of Pretium or the Bruce Jack Mine, or Sea Bridge or Skeena, or the Red Chris Mine. So like we are our own district, the Cassiar Gold District. We are 200 kilometers north of the Red Chris Mine that typically marks the northern end of the Golden Triangle. And that's along Highway 37, which is the main highway that connects British Columbia into the Yukon. So that is Highway 37 bisects our property. And we're roughly 100 kilometers south of the Yukon BC border. So it's relatively north in British Columbia, but which and I guess one thing that is probably also worthwhile mentioning, and that's actually probably almost can see here in the background. So you can see actually here our mill and a couple of our tailings facilities. It's like very, very flat grounds, and especially when we compare that with some of the Yukon projects or properties or British Columbia properties. A lot of them are in rugged terrain, or in the Golden Triangle specifically. A lot of them are, within glacier areas or with heavy snowfall. So we're, kind of a really idyllic scenario, although, relatively far north, because northern BC is, at least in my book, I'm Portuguese born and raised. So, anything north of the Great Lakes is pretty far north, but it's actually a really idyllic scenario in terms of weather, in terms of topography, and also in terms of kind of, we have a lot of flat, areas. There's room for not only multiple pits, but also multiple tailings facilities, etc. That obviously can be quite valuable and important in the mining scenario as well.
Got it. And I think you already answered this, but this is going to be an open pit mine. It's not going to be below ground, correct?
The Torres deposit is a pit constrained, open pitable deposit. Something that is so close to surface, actually outcropping. And when you look at the current shape of the Torres deposit, it's almost like a kind of inverted pyramid, where 90% of the ounces are within 150 meters from surface. Now we're finding a bunch of satellite targets that look also to be open pitable. But in addition to that, that's worthwhile mentioning, 4 of our 5 past producing mines are clearly underground scenario. These are kind of shear vein systems, 3 meter wide on average, although these veins typically pinch and swell. The historical production there was 315,000 ounces. This is in the southern part of our property. This is the material that this mill right here processed. This is in the southern part of our property is also an area where we have most of the 25 kilometers of underground workings that takes us straight into the vein systems that are, and especially the end mine sections. We have power lines. There's also a big mine permit there. We have a 20 square kilometer mine permit at the Cassier south part of our property. And all of these vein systems are open for expansion along strike and down dip, and there's a lot of room for parallel and stacked vein systems. So it's most of our focus, and I would say maybe 60 to 70% of our effort resources have been focused into the bulk tonnage, because that's where we feel we can build tonnage in ounces faster, which is what the majors will ultimately want. But we have a significant potential on the high grade. but because they're skinnier and kind of harder to define, although they have a good width on average, 3 meters is not too bad. It's actually pretty good. It's despite that, it's actually harder to build ounces because when you're drilling on the bulk tonnage, you're typically hitting, in many cases, from surface, and you can, there's less meters kind of wasted not hitting what you want to hit. Although, of course, when you hit the high grade, it's very high grade, and it's very juicy, and it will be, obviously higher margin, or theoretically much higher margin ounces than the bulk tonnage. But at the same time, we would just want to build our scale in the critical size that doesn't remove any potential acquire from the equation as we build this district and kind of build our resource inventory as we drill and continue to explore.
Yeah, got it. Okay, that's actually very impressive because somebody that's been doing this for a while, getting permanent can take years. So, but let's talk a little bit about money that you have in the share structure, money you have in the bank. How much money do you have in the bank? And do you plan on starting to produce? Or are you going to just expand the project with that money? What's the plan?
Yeah, no, we have around $5 million in the bank. We could potentially put this into production ourselves, given how blessed we are in terms of the permitting situation, the topography, the infrastructure, the access. It's all of these things really lower the barrier to entry because you're not going to have to spend hundreds or even billions of dollars in developing that infrastructure, which is the case for a lot of exciting projects that are, despite being geologically very exciting, they're very far away from civilization, very far away from infrastructure. So that really puts us, in a really unique position as a company. But our goal and our strategy really is to, despite having all of these pieces already in place, the key for us to unlock most of the value is through exploration, through expansion, through proving a much bigger system. Because right now we have 1.4 million ounces, which is great. It's a big, it's a big resource endowment. But when you look at the footprint of 1 square kilometer for that deposit and the sheer size of our land package, 590 square kilometers, there's a lot of room to grow. And of course, size is could be meaningless in the sense that I could tell you have 1,000 square kilometers or 10,000 square kilometers is really how perspective that is, that the quality of that land package and prospectivity. We are within a 15-kilometer trend. Canada is part of the BC's inland orogenic gold belt. Is part of Cisco Development's Caribou-Barterville district, which is also kind of a belt where we have our secondary project in southern BC. And we have a 15-kilometer trend that is north-south, on which we have a lot of gas production and a lot of gold showings at surface, a lot of gold in drilling. And it's maybe 15-kilometer north-south, maybe roughly 10-kilometer east-west, so that accounts for about 150 square kilometers of highly prospective footprint. Not to say that what's outside and within that 590 square kilometers is not, it's just that we don't have enough information. Most of it we haven't actually put boots on the ground. And even 150 square kilometers is a tall order for anyone to properly explore. But the potential is there, and it's really we're really blessed to have that, and we know that part is quite perspective, but also takes time and effort and work and resources to expand it. But we believe that's how we generate the most value for our shareholders. I think we're quite undervalued as it is right now, but that's really the focus. Now, in terms of the development scenario, kind of, I don't know if you were asking that as well or not. Yeah, we could potentially develop this ourselves. Very, very few projects, again, have the permits, have the infrastructure, have the access, have the mill, have the power, or even have an experienced board that has done it before in a junior mining space. So I think we have a lot of ingredients to potentially put this into production ourselves. But obviously, when you look at historical transactions, that materials or majors or acquire their projects, and they can be anywhere between 100, 150, 200, 300, $400 an ounce on the ground. And when you measure that against kind of the risk and the time and the effort it takes also to develop something, we believe that an exit scenario by M&A could be a way to generate the highest amount of return at the lowest, in the shortest amount of time. But we have to put all into balance, and as we go forward, and interest comes along, to properly assess every single scenario. But having that kind of dual optionality of progressing the project ourselves, eventually, ultimately, even to production, or potentially waiting for an offer for mid-tier or major. I think it's really the ideal scenario, and very few companies have that potential to, just because of all this context of where we are between, the permits, the infrastructure, et cetera, that puts us in a very unique position.
Yeah, I would agree. It's very interesting. Share structure and your share price, where are you currently traded at? And then tell me about how many shares do you have outstanding fully diluted?
Sure. So we have 127 million shares outstanding. So I think share price, as of late last week, we're like 21 and a half, 22 cents. So,
right.
Yeah, so that's, roughly 27 million Canadian market cap.
Okay.
The EV is just slightly over 20 million Canadian. The Canadian dollar is relatively weak against the US dollar in the last few weeks. Fully diluted, that's 178 million shares. Our lowest price warrant is at 50 cents. Our highest price warrant is at 70 cents. The warrant exercise could bring, $20 million, over $20 million into the treasury. If they're all exercised, they'll expire within the next year and a half. Insider ownership is roughly 12, 13%. Institutional shareholder base is just under 30%. We've been able to attract, a lot of high quality institutional shareholders in the past 4.5 years, from basically zero to where we are right now. And we also have good analysts, newsletter coverage as well. That's kind of.
Yeah, I got it. So you're about 43% in strong hands is what I call it. Okay. Excellent. Well, give me your ticker symbol, and then how can people find you, and where you trade at? I believe you're over the counter as well as in Toronto. Your website.
Yeah. So our ticker symbol in TSXV is GLDC. We also trade in the United States on the OTCQX. Our ticker there is CGLCF. We're also traded in Frankfurt, in Germany, in Europe. And our website is cassiargold.com. So that's CASSIAR gold.com. And you can also find me, if you have any questions on the reach out, want to know more about the project, you can, find me directly on my email, Marco, MARCO @cassiargold.com. That's 2 S's, IAR gold.com.
Got it. I will put all of this in the show notes, and to all of our listeners out there, I am not an investor yet. I more than likely will be. That is a full disclosure. As well as Cassiar Gold did not pay for this. We did it on our own, meeting Marco and myself, did it on my own accord. This was a great project that I wanted to highlight. So, Marco, anything else you want to leave our listeners with?
No, I think, first of all, just thank you for taking the time, everyone for listening. I think, the junior gold mining space is, quite undervalued. There's a lot of opportunity. Do your own research, analyze things deeply. There's a lot of opportunity in this space. We're not the only ones, but in a space, actually, there's a lot of good companies undervalued, but we're very, very undervalued. And if you have any questions, don't hesitate. I'm more than happy to showcase the opportunity that the Cassiar Gold story represents. And I think in this macro and global context, it's a great way to protect yourself and your financial future and the future of your loved ones. So it's not without risks, but there's a lot of opportunity here. So, if anyone wants to reach out, I'm more than happy to answer any questions.
Thank you so much, Marco, and really appreciate you coming on board.
Thank you, Andy.